Hello everyone, welcome to the latest episode of Profit Perspectives. Today we're interviewing Mr. Sachin Bhartiya. Mr. Sachin Bhartiya is the co-founder and managing partner at Lighthouse, a mid-market private equity firm. Over the last 17 years, Lighthouse has raised multiple funds aggregating to more from large domestic and high-quality global investors. Mr. Bhartiya has built a portfolio of over 40 high-growth companies across sectors like consumer brands, specialty manufacturing, healthcare, and digital transformation.
His chartered accountancy background and early banking experience makes him unique in the private equity world. His investment philosophy hinges on high-quality governance, strong alignment with entrepreneurial vision, financial discipline, and hands-on operational support. He is one of the most respected private equity investors in India.
So today, our first question to you is, how would you explain what really happens in private equity to a student who only thinks of it as stocks and startups?
Okay. This is my first podcast. I've never done it, so it's very different kind of an experience. But thanks for having me over for this. Coming to your specific question, if you look at in terms of stocks, think about that. Every single stock that is listed today, at some point of time, is essentially the capital that was invested by somebody. That somebody could be the founder himself or herself or their family money. So in the early days, let's say in a country like India, when not many VC or PE funds were there, people will actually go and list their companies for as small as 5 crore, 10 crore kind of a thing. You will see those companies got listed in 90s, and today they are few billion dollar market cap companies. So if you look at in terms of the private equity, essentially in today's world where you have companies which are essentially raising money much before going for a listing, and this could be from the fund, this could be from angel investors, this could be from friends and families. Okay, and if you think in terms of private equity, what is private equity? Think in basic terms, capital being raised by somebody who has a great business idea. The source could be the fund. There could be different kind of funds, whether it's a venture fund or a growth equity or buyout. Don't confuse. But as a subject, if you look at private equity, is basically capital that is coming, but not from the capital market listed side, unlisted side. And this is a capital that essentially you at some point of time probably aim to list and provide exits or liquidity to the investors. So that's private equity.
Okay, so our next question is, what would your first 3 actionable steps be for someone that wants to become an investor like you in this space?
Okay, interesting question. I think this business, if you look at this area of finance, I think you require a lot of reading for sure. You will have to sort of build your knowledge beyond just the finance. You have to understand the business, global trends, macro trends, what's happening here. And I think it is very important to sort of also go walk the market, see what's happening in the market, kind of a thing. Can you just repeat the question, what you just said?
So, what would your first 3 actionable steps be?
Perfect. So in terms of, if you ask me, deep understanding of the business, right? And I would also suggest that I think somewhere it's about number, right? When you're buying shares, eventually it's based on evaluation, it's based on certain metrics, there are certain assumptions, okay? And I think it's very important to look at holistically, and this is not just the starting point. You will see as you will build your career later on, once you get into the finance, you will see every day there's a new thing you are learning. So 3 things or 3 words I don't think suffice this. It's a lifelong journey. But I think one thing is that you keep reading and keep learning every day.
Okay. So if someone wants to work in private equity or venture investing in the future, what skills do you think they should start building based on this?
I think investing requires 2 basic things. One is that understanding of the business, and do you see where the business is headed? and can you visualize that this business is going to continue? So how do you understand the big mega trends? What is the business today and how the business is going to look like, and look at the trends and understand the numbers behind it. So I think arithmetic, this is a lot of mathematics, but more so arithmetics. I think it's good to start focusing on that early on and build your expertise in that. You'll be learning and you will be using a lot of arithmetic, even mentally, beyond Excel sheets.
Okay, so Lighthouse focuses on growth stage companies, and evidently it doesn't focus on risking early startups or mega giant corporations. So how do you find the middle zone, the sort of balance, and why is it considered such a sweet spot specifically in India?
I think it's a very, very good question. If you look at in terms of our size of the economy, right? At the beginning of this century, we were around $500 billion economy in 2000. I still remember vaguely around 2010, if I'm not mistaken. You guys understand market cap, which is basically the valuation of a listed company. There were about 400 companies only in this country with about 1,000 crore of market cap. Today we have 500 companies, more than 500 companies with $1 billion plus market cap. Okay, what actually has happened if you look at in terms of economic progression, while we have made the progress from 1 trillion to almost $4 trillion. If you look at in terms of the number of listed companies as well, we are still an emerging economy, and there are a lot of companies even in the listed space. Almost 6,000 companies are listed. The other 5,500 companies that are below $1 billion market cap eventually will become, some of these guys will graduate there. And also, if you look at in terms of the companies that are already part of the $1 billion club, they also started small. And when you think about the economy as we go from $4 to $10 trillion over the next decade or so, you will see the companies from hinterland, tier 2, tier 3 cities are also now coming, raising capital, building their business, and may not be large enough to raise capital of 1,000 crore or whatever. And I think in India, if you look at any economy, once they have grown, before they become developed economy, you will see this large and small and medium-sized companies eventually providing the backbone of the economy, and that presents a very large opportunities for people like us. Also, if you look at once the companies become very large, they really don't need people like us. Actually, they can go and list themselves as well. But there are companies that requires sort of capital raising 5 years before IPO or before they are ready for an IPO. I think that is where we focus and play.
So when you evaluate these companies, what are 3 principles or guiding factors that tell you that a company has long-term potential? And how do you decide whether a company is worth partnering with?
Sure. A lot of work goes into it, but if you ask me 3 or 4 principles sort of driving our decisions, or this is very common actually, I'm not saying something that is unique to us but unique to investing, is business model, whether the business model is good or no, the quality of management. Okay, I think with these 2 you are fairly sorted with 80-90%, and then you see the mega trends. If the trends are not good, the industry management is very good, business model is very good, but the trends have changed. For 10 years, 15 years down the line, the business will start seeing a decline or a headwind. Then you need to be aware about. So I think 3-4 things if you look at quality of management and business model. But at the investing side, when you look at particularly, also see the valuations, because you have to make money eventually as an investor. So your entry price has to be good enough. So build that little bit into your valuation. And as students, when you are doing these things, the one thing I would recommend both of you is that take just one company, any company that you like, any business that you like, which is listed if you are hearing, or something that you use day to day. Let's say today, without naming any particular company, if you are ordering something online from any of these companies that happen to be listed, go and open their website, see what is that they're talking about their business, presentations, annual report. Start learning early, and you will see they are talking about the mega trend. You will see the business model, what is their cost structure, how they make money, how has their growth been, how many users they have, how many orders they are delivering, how many, you will see those kind of a metrics and start building that framework in your mind. And then when you look at any other business, you will see similarity. It will give you a lot of data points, a lot of inputs in terms of how to think about, and the business otherwise when you are evaluating may be very different. But as you will see one company, and if it interests you, start reading another company, then see if there is any global example that if some company in India has done really well, are there companies globally that have also done well? What are they talking about their business? And it will give you a lot of data points and understanding earlier.
Okay, so coming back to a little bit of India. So India has gradually been moving from value-driven buying to brand-driven buying. So how is this shift shaping the next decade of consumer opportunities for people?
It's a very good question. If you think about it, it is not that the value-driven buying to brand-driven buying has started now. Actually, it is becoming a little more visible because of social media. But much before you both were born, 80s, 90s, when the TV penetration happened in India, majority of that, what you use today, the soap, shampoos, the biscuits, day to day, everything that you see in your household, today they have penetrated now 90-80% households, but those also started somewhere in 80s, 90s, to unorganized to organized. When you think about value, to brand, it's nothing but unorganized to organized. As more people have money in their pocket, it's a common aspiration, right? Everybody wants to buy better products, right? As you rightly, you saw the $1 trillion to $4 trillion economy. You will see around you a lot of things changing. The way houses where the buildings were there, now you see bigger houses, bigger buildings, the quality of restaurants that you go to eat today, right? And it's a continuous phase. What looks like today, like a luxury, will essentially become a necessity, a lot of things when people have affordability, right? So this is a constant, the product will, probably the brands will keep shifting, the trend will continue for a long time.
So what changes from a consumer behavior standpoint in India's tier 2 and tier 3 cities have surprised you the most in the recent years?
I actually come from a rural, hinterland of India. I was born in Bihar, studied in Hindi medium up to 12th, right? And we will dream of a lot of things. I had never come to Bombay, right? Nobody in our family had ever come to Bombay. We will see Bombay, Calcutta, Delhi movies in TVs, right? And that's how our aspiration started, right? But then our only medium was TV at that point of time, a little bit of print media, right? Today, everybody, if you look at, has a smartphone, feature phone, they have access to internet, they have access to YouTube, they have so much of exposure that they see what's happening globally, in the sort of cities in India. And this actually, the aspirations that they are able to also access now a lot of stuff that probably may not be available in stores in those small places, are available online. And you will see a lot of companies that they were only selling offline. Today, they're selling online and offline. Businesses have become omni-channel. So when you think about these people who are in the smaller cities also, they have access now, and with a little bit of pocket filled with the money, they're able to convert that aspiration into consumption. So I think what is driving that change is the access.
Thank you so much. So my next question is, earlier in your career, what was one of the most important mistakes you made that defined your investing philosophy today?
Okay, I actually started my career as a banker. 6-7 years I did lending, a little bit of investment banking, and then it's been 17-18 years that we have been investing here. I think what is most important, and this is something that I learned early on, is never ignore the details. The devil is in the detail, as we say. So it is one thing to understand high level, and it is another thing to get to the bottom of it. And secondly, if numbers are saying something, apart from the numbers is the logic saying the same thing or no. Connecting the number with the logic is important, and I think that has been my biggest learning. And again, these things will keep evolving. Every year, every day you will make new mistakes, you will learn new things. But I think what stays with me is that number tells you the story, but whether is that making a logical sense or not. Don't just get driven by numbers. It has to make common sense.
So, what is one deal or one incident that changed the way you think about evaluating businesses?
Good question, but every single investment is a very different case study. Okay. Ultimately, it goes back to the 2-3 things that I said in the earlier part. That understand the business model, understand the quality of the management, how they think about it, understand the culture of the companies, and then again, look at the long-term mega trend that businesses that are relevant today will remain relevant or no. You will see a lot of businesses that were very, very good 20-30 years back. Today, they're not growing. They're still very good business. They're still generating a lot of cash, but the growth is not there. I think if you ask me what is one thing to understand in equity, whether it's a listed equity, startup, venture, private equity, buyout, anything, equity is growth. And I think one most important point of this, if you want to make a career in this, is to understand the growth part of business. When you buy a piece of a business or you buy an entire business, what is the likely growth of that business? Because ultimately what will decide and create value is the underlying growth of that business.
Absolutely. So speaking about growth of companies and companies stagnating after 20 to 30 years, they say every generation has a new wave of brands. So what does our generation, the upcoming generation, Gen Z, uniquely demand from companies?
Very good question, but this is question you should be answering honestly. I meet a lot of people like you. No, seriously, I actually go and meet a lot of people in your in your age bracket to understand. So for a change, you should be guiding me. Actually, it's an opportunity for me to know and learn where we should be investing, keeping Gen Z in mind. But like, if you look at it in terms of your own consumption, you'll probably find some, like, what excites you about a brand?
I think we're just our generation is very contradictory to the previous ones. Everyone would make a big deal about wearing a bag that has the brand labeled all over it, but our generation finds something like that tacky, or our generation focuses on something that's largely more based on the experience than it is based on whether this will be attractive when someone walks into my house. So that being said, what are your thoughts on how companies should be evaluated given the current market consumption?
Amazing. What's your take?
My take would be that we're growing more aware of everything all around us, especially with social media. So like things like environmentally conscious, or how things are happening all around us. Like say for example with discrimination and all those other things. So we're definitely trying to be more aware of the things we're trying to buy.
No, so we are also experiencing very much similar trends in our business, right? We are seeing that the new brands are emerging, new category in the similar category. So I'll give you, in the food and beverage itself, you will see there are a lot more new brands that have come up. The size may be small, but I think the potential is huge. There are a lot of products that are used abroad, not yet launched in India. But I think what is being, if you ask me one thing, underlying thing is that, let's say if we talk about the food, traditional food may sound boring, but I think people who are doing really well now are the ones who are adding fun to the food. Okay, when you talk about experience dining, I tell you, when I came to Bombay first time, I heard first time that there's something called disco and people go to discos, right? And no, seriously, like I have had no experience. I've never heard anything called disco, something like that. And and I used to stay in Juhu, and on Friday evenings, like it looked crazy, right? Today, if you look at, do you hear any, like discos or anything like? Not much, right?
Yeah.
People still go, they enjoy music, But the way they enjoy music has changed, just not going and blindly dancing in the disco, right? Nothing wrong with that generation that went to disco, but I think every 10, 15, 20 years, the underlying things will not change. The way you consume that underlying thing will change. So the way you listen to the music now, we started listening to the cassettes and everything, but we were still listening to the music, right? I think what will change is the channel, but I think the underlying things will not change much. Will probably, as you rightly said, that people will become less conscious about the brands. I think you will have to differentiate two things there. One is the brand which makes the unorganized to organized, so that gives you a comfort that you are buying the quality. And one is the brand that's showing off, right? I think the way we see, people are now more aware about not showing off, but still conscious enough to buy a brand that gives them comfort and trust that they are buying hygienic product, they are buying good quality and value.
Right. So coming to the last question of this interview,
Sure.
if you could leave our schools, high school students, with one rule about money, risk or decision making that will stay relevant for the next 50 years, what will it be?
Okay. I'll talk two things about it. Two things about it. One, I said earlier, and I'll repeat that: start early reading. Number one, but number two, most important is understand the value of money. I'll tell you one example. Okay, take say X amount, whether it's a 10,000, 20,000, 50,000, whatever number. Take a small amount and buy 5 stocks, let's say, or whatever you like. And 1 year down the line, you see how much money have you made. If you made money, you will have a lot of experience, understanding, and you will learn a lot of things. But assuming that if you don't make money, you will still have a lot of learning in terms of what didn't work out. Just have the courage to reflect in terms of what didn't work out, and can you correct those mistakes that you ignored in the beginning while you were investing. And I think that is very, very important, because what will happen over the next 50 years, as you actually said, as you will start investing, as you will start learning, things will change, things will keep changing. Things that you think about today may not remain relevant 10 years down the line. Okay, and you can hedge the risk that you know. There will be a lot of risk that you don't even know what risk will come. How will you hedge them, right? I think in terms of your question, I think what is most important is to reflect upon your learnings, okay, be aware about it, and focus. Okay, don't be casual about it, because this business is, the moment you become a little bit casual, it's a sure sort of recipe of losing. Okay, so be very careful and respect money.
Thank you so much.
Thank you so much.
Thank you. Really appreciate.